let me first ask about what has led to these profits being the street's expectations. You made a lot of new purchases. You're bringing in a lot of new brands to Heineken. What are the big sellers that are driving this?
Good morning. So definitely very happy to report this strong first half. And if you look around the world, all four regions contributed to volume, organic revenue and operating profit increase. So a very good achievement, quite balanced between volume actually and revenue per hectoliter, so price mix. So it's also a good performance in that respect. A little more skewed towards the second half. You know, the first half in terms of first quarter, in terms of volume had been a little lower. Now, if you look around the world, basically Europe performing well, with growth coming from a number of countries. I will single out Italy, France, Spain, many others, so quite a balanced performance. A number of our key markets in emerging markets still performing very well. I will call on Mexico here. And then you see also some newcomers or markets that we accelerated recently, like Cambodia, actually, growing very fast since we've been able to increase our production capacity locally. And in Africa, you see Ethiopia performing very well. And of course, Côte d'Ivoire, our newcomer, we launched a brand called Ivoire last year, and it's working very well, contributing to volume growth and revenue growth this year.
How important I noticed that the Tiger brand has been driving growth in Vietnam. You've got real pricing power there. You've recently purchased Lagunitas, which is a very well-known craft brand in the U.S. How important are these newcomers, you mentioned Ivoire, these craft beers to the growth at Heineken, as opposed to, the main brand?
Yes, thanks for mentioning Tiger. Tiger is one of our beautiful brands. It's an Asian brand. It's really an international brand for us. It's already very big in Vietnam, of course, and continuing to grow a strong single digit, basically driving the whole category, which is kind of upper mainstream or affordable premium in Vietnam. Now, if you look at a craft brand like Lagunitas, we actually entered this partnership in 2015, and we've been learning about U.S. craft, and in particular IPA. Since then, with Lagunitas, it's been a very successful partnership. We've decided to accelerate it by moving to 100%, also to remove some of the complexities of a JV and be able to really go after international growth for Lagunitas. The craft market in the US, while it has been slowing a bit, is actually quite vibrant for IPA. And if you look at Lagunitas, it is one of the brands that has retained very strong growth. So that, but we will only consolidate it really in the second half. We only have 2 months of consolidation of Lagunitas in the first half, so that I would say that is not significant, but it's a very good move, and we're very happy about it, and it should contribute to the growth. And more than I would say quantity, it's about quality. It's about learning more and more about this craft US market, bringing it to other countries in the world, and that goes with the trend of wanting more choice, more flavors, and bringing back the interest into beer in general.
Laurence, good morning. It's Guy Johnson. How close did you come to raising full-year guidance?
We're very happy about this first half performance. If I look operationally, what you see is advertising and marketing is skewed differently than in 2016. It was stronger in the first half in 2016, partly due to Euro 2016. So we expect a bit more of that in the second half, a bit more of advertising and marketing costs in the second half. And then when we guide all-inclusive in terms of foreign exchange impact. So transactional, translational, and as you know, we're still in a big volatility moment in terms of emerging currencies. So what we've said at the beginning of the year is that our guidance included an expectation that the headwinds from currency would be as negative as in 2016, and that we're still maintaining. You see, in the first half, it was probably a bit better than expected. There was no devaluation in Nigeria, for instance, but that could still happen. And again, we still see volatility on a number of emerging currencies. So this is why we're confident to confirm it, but we are confirming it, maintaining the guidance.
More broadly in the consumer space right now, it does seem that activism is becoming more and more of a feature. Nelson Peltz, P&G, Dan Loeb over at Nestle. You got M&A activity surrounding Unilever. Do you expect this to become part of your landscape as well? How do you avoid it? Do you embrace it? You're delivering extra growth. Do you think that is enough to maintain kind of where you are in terms of the level of interest from the activists?
One thing that the current environment is telling you more than ever is never be complacent about your performance. Always look at what you could do better. One other thing it is telling us is that long-term sustainability is about continuing to grow our brand. It's about continuing to be centered on our consumers and on our customers. And this is a bit of the reason why we gave this long-term margin guidance back in 2014, which is to say 40 basis points, this is what we call continuous improvement. So we are going to continue to be skewed toward the top line because we do consider that you have to grow your product, you have to matter, you have to bring what the consumer like and bring beers that they will continue to enjoy and to love enjoying together. At the same time, you have to continuously work on your cost. And you also have, in terms of communication, in terms of what you say to the market, to be very transparent about what they get when they come into Heineken. That's what they get. They get a company skewed towards sustainability and top line with a deep conscience that you are in perpetual improvement, that you're in continuous improvement in terms of your cost base. And we're planning to continue that way.
You mentioned the popularity of IPAs. In the U.S., it's clear and the market is full. Here in Europe, I've recently been in Italy and Spain and living here in Germany. I noticed the demand for IPAs is still much bigger than the supply at sort of local drinking holes. Is there a possibility that you can bring more IPAs to Europe? And if you're making any more acquisitions, are IPAs high on the list?
We have a number of IPA brands, of course, Lagunitas, but if you look at our small craft brands in the UK or our small craft brands in the Netherlands, they do have an IPA flavor, an IPA version. So that is something that we continue to develop. Definitely Lagunitas could go to more countries, and definitely we can continue to develop the IPA segment based on Lagunitas, but not only.